This is what we are dealing with. Again, about a 5.5% move on the day over here for Bitcoin. And this is that rally that we were talking about from right below the 20-day moving average all the way up to this pink and red line that we have, which is the 50-day moving average. Now, this used to be an area of support. We saw Bitcoin bouncing off this for a while, but ever since we broke down, we've been talking about this. It feels like every week, almost on the week, TiVo. It feels like every week we come back and we're like, oh, we're back at the 50-day moving average. Here we are again. Let's run it back. But it's true. I mean, we seriously are just coming up to this area, and we've seen Bitcoin reject this once, now twice, now three times, and now we're coming back up for a fourth time. But I'll tell you what's different this time around. And that's that not only do we have this falling level of resistance that we've had on Bitcoin for a little while now, and we've gotten this through its just consistent lower highs. However, with Bitcoin kind of coming at a higher low here above its previous low, this kind of breaks the trend of lower lows. And so now what this does is this puts us at not only having lower highs, but also now higher lows. And so for the past maybe almost 2 months now, Bitcoin has been bouncing off of $60,000 as the primary support. Again, we've just continually all the way through, with the exception of just over a week ago. And this is where Bitcoin fell through. It had a lot of people scared. A lot of technical analysts were looking at this and saying, hey, we could definitely move further down. But the bulls came in and they just bought this thing up in mass. We saw the ETF outflows diminish. We saw the bulls come in. They had a lot of strength. They sent this thing right back up to resistance. And that's exactly what you want to see from a dangerous zone. You want to see the bulls come in and say, not today. And so now, as we're kind of seeing these higher lows and lower highs, this creates the popular term that we like to use called a squeeze. Now, if you're not sure what a squeeze is, this is where you get pressure essentially building from both the bulls and the bears, resistance and support. It's converging on one another. And think about if you had a balloon in your hand, right? You're squeezing it harder and harder and harder, and pressure is building towards one end, and eventually it pops. It makes the loud noise, air rushes outwards. If it's a water balloon, water goes everywhere. Well, the same goes for the markets, right? We have pressure building, and now we're looking at this and saying, okay, well, are we going to pop and explode to the upside, or are we going to pop and explode to the downside? Because if we break the 50-day moving average here, this breaks the short-term downtrend, and this enables Bitcoin to arguably go back into the 70,000s, the low 70,000s, start retesting really the last and primary resistance line around all-time highs. And this is what we want to see from the bulls. We want to see them get rid of the immediate bearish argument that is causing Bitcoin to squeeze into this big old support. Because if this continues, well, we're really starting to wear support thin here. And the bulls need to come in and defend this thing, because if not, we could maybe get a descending triangle, something like this. That's essentially just pushing prices down lower. And then we had the whole argument, or the whole conversation, of Bitcoin going back to the low 50s, high 40s, around the 200-day moving average all over again. And so that's what I'm looking at on the charts right here. These are the areas that I'm watching out for. I'm watching out for the 60K support line. I'm also watching the falling level of resistance that is the 50-day moving average. I think this is where the squeeze is, right in between now. And I truly do believe we're going to get our answer within the next week or so. I mean, heck, we might even get it today, depending on how Bitcoin keeps going over here. And so that's everything that's happening on the Bitcoin chart. And we've also seen Bitcoin dominance back on the rise. Now, this is one of those things that we like to talk about over here, because everyone's always asking, hey, when are we going to get an altcoin season? When are altcoins going to be the move? When should we be investing in these things versus, the large caps like Bitcoin? Like, how do we know when one should be a priority over the other? And well, we look at things like Bitcoin dominance and the total two chart. And so Bitcoin dominance is back on a tear here. I mean, we saw this thing bottom out right around 53, 54%. Now it's all the way back up to almost 56%. And so all that this means is that Bitcoin is outperforming the vast majority of altcoins, and dominance is back on the rise, which is always, 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 always something that we see going into a market cycle. Bitcoin dominance goes up, altcoin season happens, Bitcoin dominance gets wrecked, and altcoins go on these crazy runs. And so there's certainly some outliers. I'm sure we're going to talk about them in just a second here. But before we get deep into the altcoins, I want to open up the floor here, get everyone else's thoughts, because man, what a day we are
Yeah,
having.
no, I love it, dude. Incredible TA, and I think you're right. I mean, what I'm seeing here is there's a vibe shift. I don't know if you guys could hear it or feel it, but there's definitely a vibe shift. I think that people have been super doom and gloom for the past 2 months on this kind of the back of these altcoins cratering, Bitcoin cratering 25%. Some altcoins are down as much as 60%. So I think there was a lot of doom and gloom. There was a lot of kind of FUD around these inflation prints that were all coming in pretty hot as well. But I think like we've reached, or we've actually surpassed that sort of peak pessimism for like this part of the correction. I think that this is like a pretty normal correction. It's lasted about 2 months, which is pretty standard for a bull market correction. Somewhere between 45 days and 75 days, call it, is a pretty typical correction of 25 to 35%. So this kind of checks all the boxes for me. We had the pessimism on the timeline. We had like the magnitude and the sort of duration of the correction sort of match. And then if I could throw up my chart as well, just to kind of show you what I'm looking at, just because there's a million different ways to look at the same chart, right? And so let me know if you can see my screen here.
Yep.
Cool. So basically, like if we kind of take a look, I'm also looking here at like there's a couple things. So first off, this dip that we had back in January, it was only it was about 12.5% away from the 200-day moving average. This current dip resolved and started to reverse, as Brendan, you talked about the trend structure break. That's really key, right? That trend structure break. This also bottomed about pretty much the same exact 12.5% from the 200-day moving average. So I think that's pretty key. The buyers that stepped in during this dip and you could also see as illustrated by this blue line, this anchored volume weighted average price. Buyers stepped in and supported this dip all along the way. Here, pretty much here again. Here, we're reclaiming this level as support. So we've got a new trajectory here of sort of this bull market. This line right here, this dotted white line is now kind of the primary trajectory of this support. The 200-day average kind of came in. And we also have, on the money flow index, we've got very clearly a decline in, volume-based momentum. Here's the volume as well. We've had a decline of volume during this contraction. On balance volume oscillator as well, showing decline throughout. So that's kind of what you want to see. Just a standard correction, but you do have, on these oscillators, very clearly a sign that they've stopped moving lower and they've actually started to move higher. There's a trend break as well here. You could see on the money flow index very clearly starting to tip back up in a pretty strong manner. So that's some confirmation. The confirmation isn't 100%, and let me just we'll get rid of all this. We'll just go to a fresh chart here to get rid of some of this stuff. And you can see that we are finding support. So I like this. I like prices coming back to the highs here relatively in short order.